refer to as maybe a more simple situation. But the beauty of the human existence is that there is nothing that is simple. Everyone is unique in their own way in their situation. So, you know, as we go through this presentation, we're going to try to cover the majority of people. We'll welcome questions, use the chat. I'll be looking at the chat and trying to address questions there where possible. I might try to bring it into our presentation because certainly discussion is helpful and lots of people have similar questions, but recognize that some questions are highly specific. And so remember this too, because as you're out with your friends and your colleagues and acquaintances, we see this all the time in our profession is people will come to us and say, well, I was talking to a friend of mine and they said, and then, you know, ... Realize that while everyone on this call are likely all students, you are all, believe it or not, different students. You have different things going on. You're from different countries. You have different, you know, characteristics and things. And so be careful trying to generalize yourself with others, because one little change is much different and can change, you know, everything drastically. So that's, if anything, the takeaway. You know, I could explain it in your terms for, like I said, a lot of people are in engineering and medicine. No two patients are the same, you know, no two bridges get built the exact same way. There's lots of different ways of doing things. So with that, I'll probably stop talking and then give it to my colleague, Josh, who has been doing this presentation with me for a number of years. So you get to listen to him drone on. And every so often I'll pop in, but and I'll watch the chats, but certainly we encourage questions and participation. So one final thing, we will go through the slides first, just kind of sit back and try to absorb what you can. And then I'll try to keep us on time, and Catherine will certainly try to keep us on time. We'll walk through some of the forms to show you some of the line items. This is how you might fill out your tax form. And if we're lucky, we'll have some time at the end to maybe, you know, turn it over to the audience for questions and things like that. So we'll try to get through the materials, you know, fairly quick, and then to the forms and save some time. So with that, I'll give it over to Josh.
Thank you, Steve. Let's get started. So with U.S. taxation, there are a bunch of different categories that you can fall into, but let's start with what's a resident and what is a non-resident for U.S. tax purposes. So in most student cases, international students specifically, you're going to fall into the non-resident category, but we can go over both to kind of differentiate the two. And it'll make sense as we go through the presentation, why you don't want to be treated as a resident. So a U.S. tax resident is someone that is taxed on their worldwide income. What this means is not only are you taxed if you have a summer job in the U.S. while you're going to school, or if you work for the university, but if you also had income, whether it's a bank account that generates interest or dividends, or maybe some other form of compensation that comes from your home country, it would be considered taxed. However, residents get a worldwide tax deductions and credits. So this would be stuff like the standard deduction that you might hear about, child tax credits, other dependent credits. Another common one is the education credit for tuition. And then if you're taxed as a resident, you will be subject to the disclosure rules of non-US assets. So that would be reporting your foreign bank accounts, your foreign investment accounts, basically any foreign asset that you own, could be a company as well. So For non-residents, which is how you will most likely be treated, the US will only tax you on your US sourced income. So the US is only interested in taxing the income that you might have, like I said, worked during the summertime in the library, for the university, in a lab, if you're an engineer or an engineering company. However, because you're only being taxed on your US sourced income, your deductions and credits are limited. So in most cases, you won't get the child tax credit, you won't get the tuition credit, you won't get the other dependent credit. And the only deduction generally that you'll be able to take is the deduction for the state and local taxes that were withheld on your behalf by your employer. The plus side to being treated as a non-resident is you wouldn't be subject to the same disclosure rules that a resident would be for reporting your foreign assets. And this is a good thing because residents, if they don't report foreign assets, they can be subject to large penalties. Typically, they start in the 5-figure range. So it's a good thing that you don't have to worry about that. When you file a tax return, you'll notice that there's a couple options of how you could file: single, married filing joint, married filing separate, head of household. For non-resident purposes, which is what you guys would be classified in, you generally cannot take a married filing joint position. You would either have to choose between married filing separate or single. And the only downside to this is everyone wants to pick the married filing joint because you get better tax rates this way. But unfortunately, in your situation, you're stuck with the single rates and the married filing separate rates.
So from these first two slides, the only thing I would add is, if nothing else that you obtain from this presentation is at least have an understanding of, if and when you become a resident of the United States, either now or in the future, maybe you're finishing your studies, you go home, you become employed, and then a few years later, there's an intercompany transfer to a U.S. subsidiary. Maybe it's a sub of a foreign parent or otherwise. Is understand that once you become a resident, the U.S. is really the only country on the planet that taxes based on citizenship. And then once you become a resident, you're taxed on worldwide income and you're subject to worldwide disclosures. So most folks don't understand the obligations that could be. There are lots of them. The IRS wants to know about anything and everything that, could generate income either now or in the future once you're a resident, right? And that kind of makes sense to a certain degree, because how do they know that everyone's reporting everything, right? So people in the US, there'll be payers in the US that will report things to the IRS, but overseas that may or may not happen. So the one takeaway to remember is, when you become a resident, if nothing else, find a qualified advisor so you could explain your situation, so you're coming in clean and fresh. Too many times, Josh and I, we have people that come to us that have been in the US for 5 years or so as residents and say, I never knew I had to, report my non-US bank accounts. And we're like, wow, that's too bad. Or these assets. And so that's where you get into hot water quickly. Like Josh said, the penalties, are significant. They usually start at 10,000 and they can be much more. So if nothing more, just know that, hey, once you become a resident, if I have non-US assets, that there's something I need to do, and I need to talk to someone. So keep that in mind.
Thank you, Steve. So what is the typical definition, or what makes you a US resident? Well, if you're born here and you're a citizen, you automatically get pulled in unless you were to give up your citizenship and passport. For people coming into the US, it's based on the amount of days that you were here. And we call this a substantial presence test, SPT. And the number of days, which is pretty similar across all countries, is 183. Basically, there's a formula to get to that 183, but essentially, if you have 183 days in the current year, the US will consider you a resident. However, if you have certain visas, F, J, M, or Q, there are special exceptions where your days don't count and you would not be considered a US resident, regardless of how many days you are present in the US. So if you are a student, none of the days are going to count and are going to be exempt for no more than 5 calendar years. So if you're here going to school for 4 years and you're filing and reporting tax returns and you're continuing to file a non-resident US income tax return, and after the 4 years is done, you leave the US, you go back home, and you work in the country, and you're never taxed as a resident in the US. However, if the degree takes you longer, let's say 5 years, you're still covered. There are certain circumstances where, let's say, you're going for a PhD. You're here for 4 years, you do your master's in 1 year, and then you're continuing to go to school after that. There are certain facts and circumstances that would allow you to take a different position to still claim what we call a closer connection to your home country, that you would still be able to exempt days. However, this is based heavily on facts and circumstances. And if you get to this point where you're over the 5 years, you might want to seek the advice of a tax advisor to determine if you can claim this position.
So a quick recap. Generally, one counts their days of presence in the US. Once you've been in the US for long enough, then the US would count you and consider you a resident. That number is 183, but there's a formula that I think we just went through. So you could, it's mathematical, you count it and figure it out. The exception to remember is anyone who has these special types of visas, the F, J, M, or Q, you don't have to count your days. So you could physically be present in the US for an entire year and you're still not considered a resident because of the type of visa you have. And from a practical perspective, if you think about it, why does that make sense? Because, well, I'm only here temporarily. I'm here for a particular purpose, which is to study, to become educated. And maybe while I'm here, I have a job or something like that, but it's not my primary purpose for being here. And so the US recognizes that, and that's why these special exemptions are available for these types of visas, because they say, look, you're only going to be here for a little bit. You're here to get educated. In theory, you go home. Obviously, we'd like you to stay once you get there because we like to have, educated folks in our workforce, but that's a different topic and a different tax discussion. But for this purpose today, that it kind of makes sense, right? If you're here for a limited purpose, that certainly we're not going to make you participate in the US tax system, as a resident, as everyone else, because it's quite simply a special carve out. So hopefully that helps.
So when you're here and you're going to school, there might be a couple things that come up. And you might wonder, is it taxable? Are there exceptions? how does this all work? So you might receive U.S. scholarships for tuition, books, room and board, etc. You might have that OPT CPT where you're doing an internship at a company, and it's paid. And then you might work directly with the university in a lab or in some kind of teaching capacity. Luckily, there are some treaties. There are some standard rules, and there are some treaties that would allow you to reduce the taxable amount of these items, which we'll get into. So the first thing we're going to talk about is scholarships. Qualified scholarships are not taxable as long as the person receiving them is going or is a part of a degree program or a degree candidate, whether it be for undergraduate, graduate, any type of degree. And some common examples of expenses that would qualify are tuition, fees for enrollment, any type of supplies, lab equipment, basically anything related to the course that you have to buy as part of the enrollment process, books, etc. These all qualify and would not be taxable in the US. So some items that are generally treated as taxable income. If you are just going to school in a non-degree program and you're receiving a scholarship, but you kind of haven't chosen a path yet, and you're just kind of taking classes here or there, and you're not a degree candidate, that would be considered taxable income. Any amount you spend on room and board, travel reimbursement for your spring break vacation in Cancun or Mexico, any expenses that are incidental to grant, basically anything that you're not using for tuition or things directly related to the course will be deemed as taxable generally in the US. There are some exceptions under the tax treaty, which overrides domestic law, where maybe some amount of these non-qualified expenses would be deemed non-taxable, but that is typically limited. So if you were to get a qualified scholarship and you are a FJMRQ visa holder, you will not receive a form or letter from the university specifying that this is what you spent or this is what you have to report on your tax return. You will most likely receive, and this is a common question, Form 1098-T, which is for people that could take the tuition tax credit, but as I mentioned before, you cannot qualify for this since you are a non-resident. Now, some other forms you might see in the mail are a 1042-S. So this form basically would report any non-qualified scholarship income for a degree candidate or any non-degree candidate scholarship income. And one thing to note, I think there might be a slide on this later, but I'll just mention it now. If for some reason you receive a 1042-S and you're kind of confused because you spent the money on tuition directly and you didn't spend the money on room and board, vacations to Cancun or stuff that doesn't qualify, then there is a mechanism within the 1040 NR where you will be able to essentially report the net amount as taxable. So for example, if they issue an amount that's 10,000 and you used all 10,000 for qualified educational expenses, then you would essentially report a net zero on the form, and then also fill out the portion that is exempt or that you're backing out. And we'll go through the forms like Steve said at the end and kind of show where all this stuff goes. All right, next we're going to go over wages, OPT and CPT, internships, services for teaching or researching as a condition of performing, or I'm sorry, as a condition of receiving a scholarship. So when you start your employment, you might be asked to fill out a form W-4, and this deals with withholdings. So how much are you going to be subject to withhold? And your employer would essentially take taxes from your gross pay and send it to the government, and then the government will give you a credit for it when you file your tax return. So that's kind of how that works. There is a notice listed here, 1392, that has special instructions for how non-residents should fill out and complete Form W-4. And remember, the reason for all these extra forms and things is the US is a self-reporting system. And basically, any business or university that you interact with is going to fill out a form and send it into the government. And then the government expects you to file a tax return to match what your employer or university has filed. And that's kind of how it works. So then the thing to look out for in the mail to report wages is going to be called a Form W-2. And this will have the amount that you were paid, the amount of taxes that were paid on your behalf. And it'll have stuff like state withholdings, city withholdings if you work in Detroit, federal withholdings. In most cases, it shouldn't have Social Security and Medicare. And if it does, we'll get into that in a moment on how you can kind of fix that situation. But before we go into that, we're going to talk about tax treaties and what they are and kind of how they benefit you, and why it is good to look at the tax treaty and specific provisions depending on what country you come from, because this is kind of what Steve was mentioning. You're all international tax students, but you all have different situations and different characteristics. So someone from India is going to be treated completely different and get certain treaty tax benefits that someone from France would not get, or someone from South Korea. So some of the benefits that they can provide you are exemption from withholdings on a certain amount of income. Maybe the first $10,000 that you earn here in the US from your job at the library or in the lab is exempt from income tax. That would not otherwise be exempt unless the treaty was in place. It could be that you get the standard deduction, which I think with inflation, it's almost $13,000 now. That's in the treaty for India. There's different things like that. So it's good to review what the treaty benefits have for you. And The typical provisions that you want to look at specifically are dependent personal services and income from employment, and the student and trainees section. These treaties are very long and they're also written in legalese, so it can be extremely difficult, even for us sometimes, to interpret these. So if you narrow it down to these two provisions, they'll have everything that you need. And there's also kind of what we call a technical explanation that breaks down it in somewhat plain English. It can still be difficult to read, but those are your options, and that's what you want to look at. Now, even if you figure out that, hey, I don't have to pay any tax on any of this income because I'm exempt from treaty, it still doesn't exempt you from filing a U.S. tax return. And you want to do this because the U.S. will assume the worst case scenario. So if the government reported, or if your school reported that you earned $10,000 and it was taxable, the IRS may issue a notice saying, hey, you're supposed to pay tax on this. How come you haven't? Here's a notice with interest and penalties and the tax that you owe. So this is why you want to avoid that by filing your U.S. tax return each year. Steve, do you have anything to add before we kind of keep going on any of that?
I was going to add probably right after this slide, Josh.
Okay.
One more.
So some forms that you want to look out for that would be your responsibility to fill out in addition to Form W4 is Form 8233. And what this form basically does is it informs your employer ahead of time that, hey, my first $10,000 in wages are exempt under this article of the US and Canadian tax treaty. And so basically what will happen is if you submit this to your employer, they will not start withholding taxes until you reach that $10,000 amount. So that's the benefit of doing that. You get more money in your pocket and you don't have to wait to file a tax return to get that money refunded to you. Another form is dealing with scholarship income that is tax exempt. So this form would be the W-8 BEN, and you would submit this to your university, or your university might even they might issue it to you and tell you to fill it out. And this would tell the university, hey, this scholarship income is exempt under treaty, and you don't need to withhold taxes on it. And this is regardless if it's for qualified or non-qualified.
So we covered a lot there. To back up and try to summarize as much as possible. The types of income that many people receive is either scholarships or wages. So the question is, is it taxable or is it not taxable? And if it is taxable, to what extent might it be taxable? Generally, and then this is common in taxes, right? There's a general rule. We love the words typically, generally, usually, because those are all the starting point. But with tax, as with many things in life, there are always exceptions to the general rules. And then, of course, especially in tax, there are exceptions to those exceptions. So you can go down quite a rabbit hole to get to the right answer, which is what makes this, extremely confusing. But generally speaking, scholarships, and if you think about it, what's the purpose of a scholarship? Well, it's to help pay for school. So the way I like to think about it and explain it is, as long as your scholarship was to help pay for school, like tuition, right? School is very expensive. Tuition is very high. Somebody helped me out with that. Then it's generally using it for the right purpose. The right purpose meaning that's why it qualifies to be not taxable. If the IRS thinks people are getting free money, not for, to further education, then they're going to say, geez, sounds like something we might want to tax, so we get some money for it. So scholarships generally not taxable, but they could be. So you got to kind of look at the rules and go back to the slides that we were kind of talking about. Wages, almost always taxable. I mean, by their nature, they're wages, right? So, but although they're taxable, depending on what the wages, may or may not have been for, or what country I came from, in treaty that I could look to, is I may be able to exclude a portion or all of my wages. And so that's something to look into. And then finally, when we talk about withholding, the US, it starts with withholding, but most people don't realize the withholding until the end of the year when they do their return. If we had this presentation, or you looked at this presentation the day before you showed up in the US, the first thing you look to is withholding. But typically that doesn't happen, and people are fixing it on the back end. So if I knew ahead of time that I was going to get wages and they would be subjected to tax, but a portion of those wages or all of those wages would qualify for some type of treaty benefit, I could tell my employer, hey, I'm getting 10,000, but the first 5,000, I'll use a different number. That's a bad example. The first 6,000 of it is tax-free. So you only need to tax me on the 4,000. If you tell the employer in the beginning, then they won't withhold the tax on those first 6,000 of earnings and only on the last 4,000, and your tax returns, easy. It's nice. You saved all the money. But if you didn't do that, which 99.9999999% of people don't, because they don't know about it, then maybe the employer subjected or withheld taxes on the full 10,000. Well, no problem. Now on the tax return is when you can fix that. You'd file the return, you tell the IRS, look, I was paid 10, but I'm really only taxed on 4. Please give me my money back. And that will happen. So again, the takeaway is that there's 2 common types of income, may or may not be taxable. There may or may not be a treaty. Refer to treaties in your situation to figure out, hey, maybe there's some freebies in there. I can, exclude some of my income for those tax purposes. And then for anyone who's either not employed or on your next employer, think about these withholding forms that you could supply to your employers to, take advantage of these exclusions or in treaty benefits so they don't withhold. But worst case, if they do, you can always fix it on the tax return. It's just you were out the tax withholding dollars for, until you filed the return to get it back. But that's one thing that's nice about the US system is, it starts with withholding. If the withholding was too much, well, I file a return, claim my position, and get my withholding back. So there's the takeaway. Back to Josh.
So we kind of went over this already, but this is kind of a nice recap. These are all the different forms you might receive during tax time. W-2 reports wages and withholdings associated with that. 1042-S will report taxable scholarship income that your university filed on your behalf. And then 1042-S will also report any income that would be deemed exempt under treaty. And lastly, Form 1098-T, which, as I mentioned previously, this will generally not apply and is irrelevant to non-resident students. So you can't do anything with this. So when tax time rolls around and you're kind of wondering, gee, do I have to file? Do I not have to file? If you have taxable income or if you earned taxable income during the year, you will be required to file. If you have income that is exempt under treaty, you will have to file. And the other benefit of filing too is to figure out if you can get a refund, whether it's the withholding rate that they withheld you at was higher than your actual tax rate, or it could be that your employer or university made a mistake. And so you're filing to claim a refund, as Steve mentioned recently, to get that money back. In addition to filing the 1040 NR, if you're filing the 1040 NR, you should also look into Form 8843. The purpose of this form is to tell the government that you are maintaining your non-residency status. This can be filed with a 1040 NR, or you can file it separately if it's not required. If for some reason you haven't filed this in previous years, that's okay. Just make sure that you are filing this year and continue to do so until it no longer applies. There is no statutory authority, which is why we recommend filing it and not going back and filing previous years. There is no statutory authority basically disallowing your non-resident status just because you didn't file the form. So something to keep aware of. And there is another point at the bottom that we are going to disregard because it no longer applies. So forms 843 and forms 8316. This is kind of what I was talking about in the very beginning of this presentation when I discussed U.S. social taxes, so FICA, Social Security, Medicare. When you look at your pay stub, if you see these in there, they most likely should not have been withheld because you are here on a temporary basis to pay into our government pension fund is generally not required. And what's the point if you're not going to receive a benefit in the future? But sometimes your employer withholds it erroneously. If for some reason you go to your employer, you talk to them about the situation, and you say, hey, I'm only here on a temporary basis as a student. I'm a non-resident and I shouldn't have to pay Social Security and Medicare. Then you, if the employer, basically what they would have to do is amend their payroll filings and they would take care of it and you would eventually get that money back. However, certain organizations, these amendments or changes can be administratively costly. And so they might tell you no, you're on your own, good luck. And the benefit of these forms, 843 and 8316, is to basically bypass your employer as a last resort and to get that money back on your own without getting the company involved. But first, we recommend that you go to your company and try and resolve it that way first. And then if that doesn't work, you can use these forms to get back that Social Security and Medicare that you paid in error. Some additional forms to consider, state and local. Not only does the federal government want their cut, but so does the state of Michigan. Certain cities that are also taxable too are Battle Creek, Detroit, Grand Rapids. Detroit's probably the most applicable one. but just know that each government authority has their own forms. So 1040 NR federal goes to the IRS. A Michigan 1040 NR goes to the state of Michigan. And then any city returns will go to the city authorities. They're all different forms. So that's just something to keep in mind.
Yeah, unfortunately, in the US, there's many different taxing jurisdictions. And so, we have, a federal government that assesses a federal tax for everyone. And then we have, 50 states, and some of those 50 states don't have income taxes. Most everyone else does, and they all have different rules. They don't have to be the same. So you have to look at each state and their related rules to figure out, how you should file and what status you should file. And then, of course, some states also have localities that assess local taxes. Michigan, we have a handful. Ohio has an
Every city.
an ungodly amount. They have an ungodly amount. So again, but the point is every state's different. So we're covering the basics here. We're covering the Fed, but then you got to switch to the state and then to the locals. From a Michigan perspective, which is what we would expect most everyone here to have, is Michigan generally follows the Fed. We start with federal AGI. So if income is excludable for federal purposes under treaty or otherwise, it will be excludable for Michigan purposes. Most likely, not most likely, it would be. When we move to the local return, that's probably hands off. That's they can do whatever they want, and it's generally going to tax you on everything. Because to a certain degree, you're working there and earning your wages there, and it's just going to be taxable there. So and a Detroit return, let's say, you probably have to report all the wages. A common question we get a lot of times is, hey, I've got this special visa. I'm a non-resident for the Fed. What does that mean for Michigan? And then also, what does it mean for the locality? Detroit, again, you really got to kind of peruse those instructions to kind of get there. From a practical perspective for Michigan, the position that I would take is a non-resident, because Michigan in particular is a domicile state, which means if I claim to be a resident of Michigan, then I'm saying this is my home. This is the place that I intend to return whenever I am away. So if I, as a Michigan resident, decide to leave Michigan and say I want to pack my bags and move to Germany, and I want to do that, Michigan will continue to assert that my residency is in Michigan unless and until I can convey to them that I don't plan on coming back. So a domicile state says your domicile's here until you create a domicile someplace else. And the definition of domicile means, quite simply, is the place I intend to return whenever I am away. So if I intend to go to Germany for 20 years and come back and retire in Michigan, then Michigan will say, it seems like you never really left for tax purposes. We're going to continue to treat you as a resident for Michigan. So I apply that rule exactly backwards in your situation, right? I'm coming to Michigan. I could be to Michigan for a long time, but I'm never intending to stay here because I'm, once I get my studies done, I'm out, right? I'm going back. And so under that logic, that's why I would assert that for Michigan purposes, most everyone, if you're a non-resident for Fed, you're quite likely a non-resident for Michigan. And for city purposes, resident and non-resident has a slightly different meaning because it's like, are you here or not? And for city local purposes, most everyone would likely be considered a resident because you're living in that city. And so they're going to want to, tax that type of income. The beauty is probably most people on this call have in presentation have a hard enough time, affording pizza and beverages on the weekend. So the beauty is there's probably not a whole lot of income outside of wages that has to be considered for return purposes anyway. So a lot of times, most of the times, it ends up being a non-issue. The other important thing that Josh talked about was social taxes. We said, look, your stay here is temporary. Understand that the US, again, another thing that makes us unique is that we have an ability to a large degree, set our withholding. Most other countries, you don't get a say. You show up, they say, we're going to pay you whatever we're going to pay you, and the law says we have to withhold this. We have discretion in the US. So withholding can be different. It's an approximation of what we think our ultimate liability is going to be. And if we screw that up and we come up short, then the IRS, when you file your return, is going to charge you interest and penalties for not paying enough as you went through the year. So, people can play with their withholding, but they've got to, live with the result at the end of the year. The other thing to understand is, as we've said many, many times, is these are very specific, particular, and to a large degree buried code sections and rules in tax law overall. Very few people, institutions included, are even aware of a lot of these rules. So you have general US rules, then you have this subset that's international tax related. And when we get to these students and teachers and trainees, it's an even farther subsection of those rules. So when you become employed, I'd be willing to bet that most employers don't know what to do with you. They're going to treat you like you're a regular US citizen, everyone else that's in the organization that was born and raised here, and they're going to process you the same. And that's where a lot of these problems can happen. They're not, like I said, they're not problems. Everything can be fixed. It just might take a little bit of time and effort, but it can be fixed. So it is very common that when you start employment, unless you're working for the university or a company or companies that are very closely related to the university, and this is not their first international student that they've hired, a lot of employers don't know that these rules are out there. They're going to withhold Social Security taxes from you erroneously. And then, it is you that notices this first and goes to the employer. I can't tell you how many times I see this in practice. Either our clients or, friends of our clients that are companies say, hey, I had this person tell me that they weren't subject to Social Security, and they said something about, a J visa, and is this right? And I have to tell them, yeah, they're absolutely correct. And you shouldn't have withheld the Social Security tax. And then the company either files amended payroll returns to get the taxes back and give it to you. Some companies, depends on the size of the company. If you're one employee and the company's not an overly large employer, this is a pretty complicated issue for them to deal with. They might say, you know what, we're not going to go amend those forms. We're not going to chase the money. We're not going to try to get it back. Because in the US, both the employee and the employer contribute to the social system. So if the employer amended their filings, they'd get back their half, and that would be a cash savings to them. And then, of course, they'd recover the employee's half and have to give the employee their portion back. Maybe the company says it's not worth it for us to do that. If that's the case, that's when you would pursue this 843 and the form 8316, where the employer just says, look, we're not going to go back and mess with it. But if you'd like to, by all means, go ahead and file those forms, and we'll help you. Sometimes you have to have a letter or something like that, but the instructions would tell you those things. So again, a couple of things to think about. Hopefully it makes a little bit more sense. Well, that will move on.
Okay. The next section, we're going to touch briefly on research and teachers, which are treated differently than students. Students, we said 5 years, where their days do not count and they can be treated as a non-resident. For researchers and teachers, it's limited to 2 out of a 6-year period. Typical income that a teacher or researcher might receive could be grants or fellowship payments for teacher researching or other services. It could be a stipend of some kind to cover living expenses while you're here, or it could just be direct wages. As I mentioned, there is also not only a different treatment for teachers and researchers, but there's also a separate treaty article for teachers and researchers and students. So you'd be looking at different rules and different treaty goodies, as Steve refers to them. The issue is when there's kind of a gray area between, and the lines are blurred between a researcher and teacher versus a student. I actually had a client for this exact situation in the past, and it was quite a chore in gathering all the facts and circumstances to determine the treatment. Is he a student or is he a researcher and teacher? And this is, some of these points here highlight some of the key indicators of what you want to look for to determine this, because it could greatly impact the benefits you receive being one or the other. Whether it's you've been here too long, your time's up, 2 years, and you are no longer ignoring the amount of days that you spend here and you're treated as a resident. Or it could be the different income exemptions under treaty for researchers and teachers are better than a student. So it all depends on your situation. But some of the things that they would look to the IRS, meaning they, would look to your immigration documentation for the primary purpose of why you're here in the US. Some of the other facts is, do the payments that you're receiving benefit your education? And if they do, then the student article would apply. Or is the payment you're receiving benefiting the university in some way? Are you basically running their entire research lab and basically, you know, taking care of the money that you get for the program and basically running the whole program? And you might take a couple classes on the side, or you might be getting your PhD in the process, but you're benefiting the university way more than just strictly taking courses and, you know, maybe just dabbling with a little bit of research here or there. So it basically looks at the weight of what are you here for? What is your primary purpose, and what are you getting paid to be here for? And that's kind of how you can, there's some other things too, but that's basically how you can make the determination if you're going to be treated as a student or if you're going to be treated as a researcher or teacher. You can ignore the stimulus check slide. Basically, this was a COVID-related issue, and it should not apply for the 2022 tax year.
I'm going to jump in real quick. I had an excellent question that I got. I just shared it with the group in the chat, but it's also worth mentioning for those who aren't looking at chats and listening to the thing. So the question became, hey, I, live in Michigan, but I got paid to do a lecture for a university that was outside of Michigan. And I did it remote, like we're doing on this camera right now. You know, where do I file? This is an excellent question, and this is something that's going to keep Josh and I very, very busy for a number of years, particularly since COVID, because COVID taught everyone in the whole globe that it is possible to do many, many jobs from home. All I need is a computer and an internet connection, and I can work anywhere on this planet. Countries, states, everyone is going to have to try to get their arms around what this means, because services are sourced or taxed, income is to the location in which you're physically performing the services. So if I pick up my computer and I go to France and I start working there, I could create a problem for my company. Or when I say a problem, for tax purposes, we don't like taxes. So a taxable presence for my company in France now. You can replace France with a different state in the US, fill in the blank, right? But the takeaway is that you've always had people that have, temporarily been one place. I had a business trip here for a little while, but, I came back, and at the end of the day, I wasn't there for very long. Short, sporadic business trips have always been around. They had created some issues, but not as many. Well, now you have people that are permanently moving someplace, right? And that has issues that on an individual level and a company level. But to go back to this point is for services, it's where you're doing them. We have these remote things that happen. Maybe these states issue letters, because it depends on how the paperwork gets completed. If a form and it lists a state, maybe the company erroneously withholds state income tax. Who knows? Everyone's going to have to try to figure this out as we move. But that's an excellent question. Is from a services perspective, from a wages perspective, if I'm performing services, it's taxed in the location which I'm performing those.
So with that, we will go into our next topic. We're not going to do a deep dive, but a couple years ago, since virtual currencies have exploded and they keep getting bigger and bigger, now we've got NFTs, and now we've got virtual currency tied to video games and all this fun jazz. So now there is a virtual currency question on basically the front page of the tax form. And there is some discussion within the international tax realm that this is very similar to when they did this for foreign bank accounts. You want to be honest here, because the ramifications that came after with people not reporting their foreign bank accounts was tremendous. And so if you think you're cute by not reporting or answering this question honestly, just do. It could cause you a lot of heartache in the future and a lot of money in professional fees, whether it be attorneys or professionals like Steve and I, to try and mitigate this for you. So we only added one slide on this to basically guide you if you need to seek professional advice or not. This area of the tax code specifically related to the definition of tax home for purposes of sourcing. So like Steve recently mentioned, if you work in a state, the compensation you receive is based on where the services are performed. Well, for selling personal property, the sourcing is determined by the definition of what's called tax home. You could be okay. You could be selling cryptocurrency abroad and not have to worry about anything, and it's only taxable in your home country. But it all depends on this definition of a tax home and the mixture of the 183-day rule for purposes of determining if a capital gain is taxable in the US. It is different than the 183-day rule for determining SPT and your non-resident or resident status. If you have any of these transactions going on, we highly recommend that you seek a tax professional. It doesn't have to be our firm, but to protect yourself from either trying to hide transactions and not being a part of another bust in the future, or just to pay the fair share of tax on the transaction that you seek a qualified tax professional. We're getting towards the end of the presentation here, and I think Kate will circulate this presentation as well as some common forms that are marked up that we're going to go over. But this is basically a summary of some of the things that you should look at from the federal side as well as Michigan. Each form for the federal government has detailed instructions that is many pages. And so referring to those can be helpful. There are also publications written by people that work for the IRS that basically summarize some of the rules in plain English. They're not always helpful, but they're way easier than trying to look at the tax code, and they've got some tips and tricks in them that can be helpful, and we even refer to them from time to time for some guidance if something is ambiguous. We also have some links here for treaties and the IRS forms and publications, as well as where the Michigan forms are located. And with that, I think we're going to move on to the tax forms and kind of going over them and such. So
quickly, what you folks have that I never had when I was your age was Uncle Google. So lots of your questions and resources can be presented on a screen in front of your eyeballs with a few keystrokes. So I've seen a lot of questions coming in. Hey, where do I find these forms? Where do I do these things? We've given you a few websites that are just common, the IRS website, obviously, the state of Michigan, their website, obviously, and then we did one for treaties, but Google these questions and you'll probably get way more resources even for that. So a lot of those things can come from there. And then to Josh's point with the virtual currency it's complicated. It's an area that the IRS is extremely interested in for everyone, because there's a lot of unknowns still about it. They're still trying to figure out what this thing is. What do we deal with these? What do we do with these things? So if you have, virtual currency transactions, obviously the IRS is just trying to figure out, is this taxable or not? The real basic way that I try to explain it is, if you received it, if you're working, someone can pay you in cash or potentially virtual currency, right? They could give you, here's a 1/20 millionth of a Bitcoin, congratulations. But the function is the same. Did you or did you not get paid for services? How I got paid is basically irrelevant, right? If grass clippings was valuable to you, I could pay you with a very large bag of grass clippings, right? So if I'm paying you for services, what constitutes a tradable commodity that has value to the public at large? Now, grass clippings is obviously a outlandish example because there's not a whole lot of people that see value in those, but virtual currency obviously has a real value. So if I'm getting paid for services for something like that, then I have it. Josh's other comment was regarding, sales of capital assets, if I sell stocks or virtual currencies or gains and losses. Generally, as a non-resident, capital gains are sourced to your tax home, but you could still be a non-resident for U.S. income tax purposes, yet have a tax home here in the U.S. if I have no tax home someplace else. The world is evolving, so a lot of these rules are old and didn't often apply. But as people become employed, different areas and things, that these lines get blurred. Back in the 60s and the 70s, it was harder to travel someplace. You had these hard lines, and yes, I still have my ties back home. Well, things are just more fungible now, right? People can be a Rolling Stone. You can be all over the place. And so now we're applying these rules that back decades ago was a lot easier to apply because, you had these hard lines, these hard rules. People weren't as fluid. It was harder to move globally, right? And that has become less and less difficult, which has actually made these rules that were simple back in the day. Everyone's looking at these again. We look at them every day and ask ourselves, well, gee, how do I apply this thing now, right? Because it's not the same set of rules that we were dealing with before. So the takeaway there is, again, if you have some of those transactions that, maybe you run it by someone. So at this point, Josh is going to walk through some returns. I'll keep trying to address the slides as we go through. And if I see something return or form related, Josh, I'll jump in or have you address it.
Okay. Sounds like a plan, Steve. I'm not going to go over every single line, but I might point out and comment on a few things as we go through these forms. If you have a specific question about the form, as Steve mentioned, you can put it in the chat. So the main form that first let me talk about how these forms work. The main form is the 1040 NR, and basically it's 2 pages, but there are also a bunch of schedules and statements that you will need to attach to support the total numbers on the front or back of the form. So let's start off with the 1040 NR. There are many, many, many versions, so always make sure that you are using the correct tax year, 2022. There are different filing status, as I mentioned in the presentation. For non-resident students, your options are single, or if you're married filing separate. When you start filling this out, you want to make sure you're using an address for you to receive mail if the IRS ever wants to reach out to you with a letter or a notice. And then if you're wondering what an identification number is, this would be your US Social Security number, or in certain circumstances, what's referred to as an ITIN. Dependents, personal dependents and exemptions were suspended in 2018. The child tax credit and the credit for other dependents are not eligible for non-resident students. So there should be nothing here. The way this is kind of laid out, it's a little bit more detailed from prior years. They're breaking out box 1 into all these different categories. If you earned a W-2 from your employer, it would go in box 1A. And then if for some reason your employer made a mistake and they didn't realize that, like Steve said, 4,000 was exempt under treaty, and so you receive the W-2, it says 10,000. What you want to do is net it to the amount that is taxable. So you'd put 6,000 here, and then the 4,000 would go in 1K because that's the amount that you're exempting under treaty. The itemized deductions section for most countries, this will just be whatever the sum of your Michigan tax withholdings and your city tax withholdings are on Form W-2. If you are from India and you can claim the standard deduction, see Rev Proc 9320 for more information on this. But this would be reported on Schedule A. Same thing with the state and local taxes. 16, if you've got a software, it'll automatically calculate for you the tax. If you're doing this by hand, you can refer to the calculations, the tax brackets within the instructions, and calculate it by hand. And then if you have withholdings for you received a W-2 or a 1042-S, there is a line under the payment section for each one. And then when you go to mail everything in, all the schedules and forms, you can do it all together, but make sure that you sign and date the income tax return before you send it in. So Schedule 1 basically breaks down all these other miscellaneous items that you might have received during the year. This is pretty much all encompassing, so a lot of this stuff will not apply, but the one that might apply to you is, since you are taking a deduction for the state and local taxes that are withheld on your W-2 for the current year, if you pay less tax than what was actually owed, in the following year, you would need to pick up the difference as income. And the reason why this is to avoid everyone amending their return to report their actual income tax liability for the state and local jurisdictions in that year. So it's basically like a true up. If you took a deduction in 2021 of $1,000, but you only paid $600 in tax, you would need to include the $400 on line 1 because you didn't get a deduction of $1,000. You didn't pay $1,000 in tax. You only paid $600. On Schedule 1, if you received taxable scholarships or fellowship grants for 2022, it would be reported on 8R. You want to report these amounts net, similar to the W-2 of the treaty exemption or exclusion. The rest of the stuff, like I said, most likely does not apply. This is Schedule A itemized deductions. The taxes that you had withhold for the current year would go on box line 1. If you donated to any U.S. charities, you could also get a deduction for that. That would probably be the most common one. The other items, casualty and theft loss, other itemized deductions, these most likely will not apply. So you're really just looking out for the state and local taxes. You might see this form included when you're filling out the 1040 NR. This is one of the schedules you're supposed to attach. This has limited applicability based on to 0 to none based on your situation. Essentially, if you're just, like Steve said, the 80 or 90% of our audience we're presenting to, this will just be a completely blank schedule that you would file with your 1040 NR. Schedule IO. This is basically an information request from the IRS to gather all this data on you. They want to know stuff like, what's your country of citizenship? Where do you claim tax residence? What is your visa? F1, etc. Have you ever applied for a green card? Has your visa status changed? They'll also ask stuff like, what's the number of days that you were in the US? For a non-resident student purpose or teacher and researcher, you want to fill these out as 0. And the reason for that is there is another form that we will get to in a minute that we spoke about in the presentation, where you actually report your true days. And lastly, if you are claiming any treaty benefits, you're supposed to fill out what country are you claiming them with, what article in the tax treaty, the number of months claimed in prior tax years, and the amount that you are exempting. So we kind of put together a little example of how it looked. Part M was added 2 or 3 years ago. Just know that it most likely does not apply. And if you think it does apply, feel free to seek a qualified tax professional. The next and last form that we're going to go over is the statement that you would file to report your actual days of presence in the US. This is the form that I mentioned in the presentation that can be filed as a standalone form, or it can be combined and should be filed with your 1040 NR. So it'll ask the actual number of days you were in the IRS, the United States, and then it has different sections. Whatever section applies to you, whether you're a teacher or a trainee, you would complete the information in said section. And then they also have one for student. The rest of these sections and parts most likely do not apply for professional athletes and students with medical, or for individuals with medical conditions or medical problems. And that pretty much wraps it up in terms of looking at these forms, reviewing, going through them, and kind of highlighting the key and important parts. Steve, do we have any additional questions or from the chat?
Yeah, there was talking about tax software, and you're picking my brain from a long time ago. I remembered years ago, I think it was Glacier was the program that I actually used to help people with. I can't quote me on this, but I think it was. I actually used to input it into the software. And then at some point there was another company called Sprint Tax, I believe, that does that.
I think that's what they currently use. At
So-
least at Wayne State, that's what they use.
Yeah, back in the day, I think Wayne State used to use Glacier, and then there was a Sprint Tax, but whatever, whichever one it is. These were the only couple of softwares that I'm aware of that it's interview style, like a TurboTax. Do not use TurboTax because TurboTax is thinking that you're, a citizen or resident. You have to use these specialized softwares that are geared this way, and that you would provide your visa, your passport numbers, put in your days of presence, how many years you've been on an FJM or Q visa status, all this. It asks you all these questions. And it would actually fill the form out. I believe it would also address treaty claims. So if you were qualifying for a treaty, at a minimum, the software would tell you, hey, you can get the first 5,000 of your wages tax-free, do this. But I'm guessing now, since we're in the year 2023, that these softwares have gotten even better and that they're probably filling out the form for you as well. So, and this is where maybe someone else could comment on it. I don't know if Kate knows.
Well, from talking with students in the past, it sounds like it does do that. The only limitation, and I think this was 2 years ago that I was informed of, is the software doesn't like it if you go over the 5-year period for students.
Now, I have to look at the treaty, because some treaties, when you say it doesn't like that for an NR status, you mean?
Yeah, for
Yeah.
counting your days.
That could be difficult because
I think I got a screenshot of an error that says you're a resident, you need to file as a resident, US resident in a form 1040.
Yeah. Because generally speaking, that would be the answer, right? This is all these things. It's like, it's hard enough as it is. And then now you've got these other things that are telling you this. It's easy to get led to a certain thing. But even if you did that, I mean, in theory, it might not be the worst situation as long as you file on the return correctly. I mean, generally speaking, yeah, you would file as a resident. If you did, whatever, but now you'd just be subject to tax on worldwide income, and which might be the same amount of income. Probably 9 times out of 10, it's still a better answer, right? As long as you don't have this foreign stuff going on that, non-US assets and things like that, they have to be disclosed and reported. Outside of that, it'd be wonderful. I get a full standard deduction, right? And if I have kids, here come the child credits and all this stuff. So it's probably a better answer, right? And careful what you wish for. So that's why the other thing is every situation's a little bit different. I don't remember, again, if it was universities. Some universities, they might provide these softwares to students back in the day. I know some of them did. So if there's, international departments or the student groups and things like that, ask them. They might buy a certain number of licenses and give them out for free, or maybe they just say,
or charge a reduced fee or something like that.
Right, for these softwares. That's where if you had university folks, or maybe, like I said, maybe, I don't know if Kate knows or not, but if anybody knows, worst case is just ask around. Sometimes back in the day, that stuff used to be free.
I can't help you.
No, that's too bad. So yeah, I would ask like the international student section on campus. They might, some of those used to do that.
Yeah.
I'm just going through some of these questions.
We've got about 30 minutes left on time, guys.
Yeah, we did good this year.
Yeah, you did really good.
Maybe
You didn't go on any of your long tangents, Steve.
I think you went faster as well. But that's good because then we could do questions. So one thing we could do is if we thought it was okay, we could maybe open questions. That would be easier.
Yeah.
And then we could maybe help address some general questions, or if there's another area you'd like to look at, like on forms or something, that we could do that. So I'm not going to moderate that. Someone way better than myself has to do that.
Are you looking at me?
Um,
I'm a complete idiot on this.
I don't know if I have the ability to unmute people, or could people raise their hands or whatever? If people have questions, we're happy to speak.
Or they can write the question and still continue to write the question and we can answer it. But
I can try. Okay.
let me see if I can unmute everybody.
So here's one question was, last year I received some amount as COVID relief fund. Some of that later deducted from my tuition and remaining I received in my bank account. So my question is, that amount taxable, and do I need to mention it while filing the form? So terms are interesting. You say COVID relief fund, I'm interpreting that to maybe mean like a stimulus payment.
Well, Steve, if you remember, I think we might have discussed this in the last year's topic, or you and I were in your office taking a look at it or passing around the article. And it says that basically these relief funds that were issued, the IRS said that they were not taxable.
Well, this year, but these were state different funds. So this is what I want to define correctly, right? Because words mean different things.
True.
Talking about stimulus payments, because those happened in 2020 and 2021.
Well, not the stimulus.
I know. And then you had
Yeah.
state COVID relief funds. The IRS just came out and said, look, for these state payments, these COVID relief funds, I just want to make sure we have terms that is not taxable income. They just came out like 2 or 3 weeks ago and confirmed that. And for Michigan too, I know Michigan wasn't on this. Some states, they were up in the air, like California, and I can't think if Virginia was one or something like that. But they basically said that, yeah, pretty much almost all of those would not be considered taxable income. So I think that would hopefully answer the question. Initial.
So I think I told people they can unmute. I'm not sure. Let's see how it goes. Sophia's back. She might know more than I do.
Yeah, I think people can unmute as they go. You
Yeah, I allowed unmuting.
Okay.
I think.
Yeah. Hi team, Steve, Josh, and everyone. I am Parveen. I wanted to ask one question regarding the W-2 form that I have received. So there are like 2 boxes, box number 3 and 5, which are like Social Security wages and Medicare wages. I just wanted to understand what those boxes are like. Yeah, thank you.
If you're on the FJMQ, or
Yes, I'm a F1 student,
Then
and I was working on my CPT. Yeah.
CPT, so you are not subject to US Social Security taxes. So your W-2 boxes 3 and 5 should be blank, and 4 and 6 should be blank. So you should have no Social Security wages reported in 3. You should have no Social Security taxes reported in 4. You should have no Medicare wages reported in 5, and no Medicare taxes reported in 6. If you do, then that means the employer withheld Social Security, Medicare taxes from you and sent it to the SSA, Social Security Administration. You can get those taxes back. You can either contact your employer, say, hey, you shouldn't have withheld these taxes. I'll tell you, and I should get them back. I'll tell you, depending on how many of you there are in that organization, that will be probably something they probably aren't going to want to mess with, because now that we've closed the books for the year, we've issued the W-2s, it's a headache. And if there's only one of you that they did that for, they might say, forget about it. We'll spend more time trying to recover, $200 right? It's going to cost us 5,000 to do all the paperwork and the man hours to do it. So they might say, we're not interested in doing that. If that's the case, then you'd have to go with this Form 843 route to recover directly. You're going directly to the government to say, can I please have, my portion of my Social Security and Medicare back? And the government just keeps the employer's portion. So that's what you
Got
should
it.
do.
Yeah, thank you.
Get back.
So I have an addition to Parveen's question. I mean, if the employer does say that, okay, they will grant the like withheld taxes back, so they will do all the procedure. In that case, like, do I get another like different W-2 form? Like, how does that proceed forward with if the employer agrees?
If the employer is going to go and recover the taxes, that means they're going to go get their half back. We're talking about Social Security taxes, by the way. They're going
Yeah,
to go get
Social
their-
Security taxes, Medicare taxes, even for me, the boxes 3, 4, 5, and 6 are like not blank; they are filled with numbers. So, and as Parveen, I'm also an F1 student.
Yeah. So a lot of times people find this after the fact, or they get it right away. If you get it right away, again, these are human processes, so it may or may not. The biggest thing to do is understand whether you have or have not got reimbursed. So let's take 2 examples. This might help explain it. I become employed on July 1st, and my first paycheck is July 15th. And I look at it and I say, hey, there's Social Security. I did this presentation with Steve and Josh, and I know I'm not subject to Social Security tax. I see that you guys took out Social Security and Medicare taxes. I'd like that back. Company says, oh, yep, you're right. Sorry, we will recover this. And maybe it takes maybe a month or so to get it back. And then they pay it back to you, let's say by September, right? Fast forward, we go through December, it's the end of the year. It's January the following year, they issue you a W-2. They already paid you your taxes back, but your W-2 still reflects those wages and withholdings. Well, they must have made a mistake in preparing the W-2 because you got your money back. If you got your money back and the W-2 is still reflecting wages and withholding, then I guess I don't care because I got my money back. So it's like a fake number. Example 2, it's January, you look at your W-2, you say, oh, shoot, they took withholding, Social Security and Medicare withholding. They shouldn't have. I, call them or email them and say, can I get it back? And they say, yeah, we'll go ahead and work on that. It might take them a little while, but at some point they get it back and they pay it back to you, then you're fine. You're done. Or they say, nah, we're not going to fix it. You got to go get it on your own. Okay. To go get it on your own, then you go the 843 route. On your income tax return, the fact that there are Social Security and Medicare wages and withholding reflected on your W-2 will not impact your income tax return. So even if there were numbers and there shouldn't have been, it's not going to matter because they're 2 separate taxes. One is income taxes, which is administered by the Internal Revenue Service. The other is Social Security taxes, which is administered by the Social Security Administration. They just happen to be reflected on the same form, but they actually go to 2 different places. So the main thing is, like, for me, is I like counting money, cash. If you got the cash back, then you don't care what's on the W-2 anymore. The main thing is, did I not get paid back? And if I haven't got paid back and the company's not going to fix it on their end, then I have to go get it back on my own. That's when I would file the 843.
Okay, got it. Thank you. Thank you
You're
so much.
welcome. Let me see if there's any other questions that have come in.
I don't,
Oh, yes. Okay. Karen, would it be possible for someone to share some resources which will give even more detailed information on all the forms and income tax norms? One of the slides talked about form instructions. Let me see. It was slide 24. Slide 24 is a very good slide. So if people are just even here, forget the form. Form 1040 NR instructions. That's the first place to start. Unfortunately, the IRS, and I don't like it how they've done this, but they've made everyone's life a little more difficult because a lot of the instruction and the form changed this year. The 1040 has changed this year and it's more complicated, unfortunately. But you look at the instructions for the 1040 NR, and then they'll say, go look at the 1040 for these instructions. But when you look at those instructions, here are some exceptions to those instructions. So they've made it more complicated than it needs to be. But at the end of the day, the point is when you get ready to do the tax return, start with the 1040 and the 1040 NR instructions. Those are good. The Form 8843 instructions, those are good. Publication 519, U.S. Tax Guide for Aliens, wonderful. That puts in a lot more detail around in like plain English. It's a big pub though. I forgot how many pages it is, but it's nothing you're going to breeze through it's 68 pages. So if you can't sleep at night, and having a hard time falling asleep, go ahead, crack that baby open. You'll be snoozing in no time. But it puts it's the table of contents, shows you the different areas. It does a good job of trying to explain the rules in plain English. It says, what is a resident? You're a resident if you're a citizen, a green card holder, or you meet the substantial presence test. What's the substantial presence test? Well, it defines it. It guides you, walks you through it. It gives you an example. I'm a non-resident, can I claim an exemption? What is an exemption or a dependent? Here's what the rules for dependency are. You can and can't do this. Could I elect to be a first? You got to be careful though. The only thing you got to be careful with is in these pubs is, again, FJM or Q is a special subset of what we refer to as a non-resident alien. So you could have someone who's transferred here or came to here, intercompany transfer. I'm here on an L1. I'm here on an H1B visa, an employment type related visa. You're still a non-resident, but these FJM and Qs, these are a special class of non-resident. So when you read these pubs, it might talk about, hey, if you showed up and want to make a joint election with your spouse, you could do these things. You probably don't want to do those things as the student because there's really no point in getting into there. And I don't know that you can actually make that election because you're exempt. So you can't make these first year elections because you're not counting your days. So there's a little bit, but that could trip you up, but there are parts of the pub too that refers to FJMQ in particular. Hey, if you're this, it's a great resource. Unfortunately, it's long, and unfortunately, unless you guys are in school to be CPAs, you got to do a lot of homework. It's quite a case study that you guys get to deal with. If you come out of it and like it, by all means, we are always happy to have people jump into our careers. You forget that engineering thing, man, and the medical stuff. Come be a CPA, and we're always hiring talented people. Because if you can navigate that, then you're already better than probably any first-year intern. So just throw that out there for you. My own plug there.
Nice sales pitch.
Yeah, I'll take it. Sure. Where'd the questions go? Oh, here they are. Right. Too many screens open.
Mm-hmm.
Okay, so the resources. People are talking about the recordings, emails, links. I'm sure that'll be posted probably on Global Matt's website, I'm guessing, or Global Detroit's website. We'll probably have the link to this.
Yep. Sophia and I will make sure everybody has a chance to get a copy of the recording.
Yeah, I'm planning to, we'll have a link on our website. We'll share it via social media and like our link tree that's like in our about sections. And then I'll also, if it's still available, I'll try to email the entire list of registered folks from today.
Yeah.
There was a question about link for the Michigan tax forms. We give the website on one of the slides, but I will remind you, Uncle Google knows everything. So if you were to ask Uncle Google, Michigan 22 tax forms, I'm sure you get lots of hits.
And I think we're going to try, Sophia and I, to make sure that the school offices receive a copy of the recording as well. The people that are part of our advisory board.
Yeah,
from
definitely.
Cities.
Sophia, yes, we will send you the slides.
And there's a question here, is there anyone I can hire to help with international students' tax returns? Or can it only be done by the student?
First, I'd say is go green. I love that. I don't know how to get
Yeah.
my letters to be a Sparty helmet, but that's sweet. So this is Ryan, if you're on, maybe we just, are you a student or are you part of the international student program?
Yeah, hi, Steve. My name is, I'm Ryan. I am an international student from Melbourne, Australia, currently studying in East Lansing, Michigan. Yeah.
Good day, mate.
How we doing?
I love the Australian accents. I have a few clients that I talk with, and every time he calls me and he leaves me a voicemail, he's like, yeah, good day, Steve. Just call about my taxes, and I could listen to him talk all day. It's awesome.
Excellent. Yeah, sorry, I missed the first part of this this session because I was actually conducting some work for my internship. But I've just been added in. I was wondering if I could get a copy of that slides, but it sounds like Catherine said she'd send it out to the registered participants. Oh, excellent. Thank you.
So I'm not going to lie. Here's the problem that happens with all international students and a lot of just non-resident aliens who come here, especially if you're doing CPT and OPT. The U.S. government doesn't make it any easier on you. You know, again, it's a very specialized area, so you can't really go anywhere because most people will try to fit you into a resident box and they'll end up doing the return wrong. So then you got to find someone who has enough experience in the area to do it, like us. And because we have the experience in the area, we're not cheap. But your situation on its face isn't ordinarily difficult. It's difficult to navigate the forms. So it's like, man, I'm a student. I mean, I barely afford pizza and beer, and you're going to charge me. So it's hard to find it, which is why we do this presentation, because we try as hard as we can to help show people that, if you go someplace else, you might find someone who can do it cheap enough. Otherwise, they're going to be expensive. But if you can put in a little bit of elbow grease and navigate it yourself, then that's extra, pizza and beer money that you could spend much better than on someplace else. On MSU, I would not be surprised if there is, at least access to the software, right? To have that for free. There may be postings, back in the day in the accounting group, Steve Dilley, he was one of my professors, and he actually has like a federal tax workshop that he does. Now, I don't know if he does it for students or international students, but there could be something similar to that on campus where there might be a professional organization or CPA firm that, does this. Hey, we have come in on a Saturday and, we'll help you with your return. I don't know, but MSU is huge. There could be something like that. Go to that International Student Affairs Department and ask them what your options and resources are. Maybe there could be something like that, but at a minimum, I'm sure they probably might pay for the software, which is a huge thing. Those softwares are actually pretty darn good. It's a Q&A format and you put it in there.
Okay, excellent. Thank you, Steve. And so there's some sort of software that is required to do the tax returns. Is that correct?
It's not required. It's helpful. So the Glacier, and I think Sprint Tax, are geared specifically for international students. If you were to go into Costco or Sam's Club and buy, a TurboTax, you're going to get the wrong answer because they're going to think that you're a resident and you're not. But these other, at least these are the two that I'm aware of. I haven't used, I think he used Glacier like years and years and years ago, early 2000s. They're geared for you. They're asking you questions about your visa, your travel, how many years have you been here, and it will prepare the 1040 NR, it'll prepare the schedule OI, it'll prepare the 8843, and I think it even prepares the treaty position if you have the treaty positions. So it's pretty good.
Okay, excellent. Thank you. And if I was also planning to, oh, sorry.
No, I just want to say quickly, I just threw those two names in the chat. I don't know, so.
Yeah, wonderful.
Yeah.
Thank you, Catherine. And so, sorry again for missing the first part of the session. If I am planning to apply for OPT, is there anything that's massively important for me to remember while filling out the tax returns?
I think if you're going to do OPT, the thing I would do is look at the US Australia tax treaty and say, is there anything in here that I could exclude from my wages? So whether it's in the student article or potentially the dependent personal services, treaties are a little bit hard, but chances are probably not going to get dependent personal services, because just to back up for 1 second, dependent personal services, the whole points of treaties is short-term travelers between countries. We encourage trade of people, bodies between the two countries. Look, I have a short-term project. I'd like to send a US person to Australia for 4 months to do this. Can we just not have to deal with taxes, guys? And most countries and treaties say, yeah, I mean, as long as they're there temporarily and the company A is not charging company B for the services, because that kind of sounds like you're doing business. But if you're keeping the cost at your home country, then, no harm, no foul type thing. If you're doing CPT or OPT here, you're employed by a US company, there's no treaty claim there. But on the student and trainee thing, maybe not. Sometimes they have things that is regardless. If you are here on F1 and get paid for something that furthers your education, your first $5,000 is not taxable. That could certainly apply to you. So I'd look at the treaty if that's in your treaty. Every treaty is different. So look at the treaty to see if that does. If it does, then you can come in your first day of OPT, remind your employer, hey, I think the first 5,000 of my wages are not taxable. They're gonna, start calling me and Josh. Hey, this Aussie's on the phone and he thinks the first $5,000 of his wages aren't taxable. And then we start asking the company all these questions, and they ask you, and then through that whole process, we figure out what to do. If you can do it up front, wonderful, because then now they're not going to withhold income taxes on the first 5,000, so you have more money to go to movies and do those things, buy more school books. Yeah. And so you're fixing it up front. The other thing is, again, if you're on F visa, no Social Security and Medicare. So remind your employer, I'm not subject to Social Security and Medicare. Please don't withhold it. If you get your first paycheck and they have it on there, then you can go tell them, hey, can you fix it? It's a lot easier to fix it closer to when the mistake happens than waiting to the end of the year. At the end of the year, you can still always fix it, but to the extent that you can get the employer to fix it, it gives you more time to not have to deal with it, which is
okay. Yeah. So as an F1 student, like I'm currently, I was working an on-campus job, and I was only there for about 7 or 8 months. So if this treaty thing is actually, they're around the $5,000 mark, I definitely didn't earn that much money. I'll definitely do my research on that. But I was just wondering if I need to file the tax returns before I apply for any OPT, or if they're really not gonna bother each other.
Yeah, those are separate events.
Okay.
So one thing that you bring up is interesting point too, is there's a difference between your 7 months working at university. That wasn't on a CPT or OPT, right?
No, that was as just on campus, 20 hours a week. Yeah.
Well, like cafeteria, right? Something.
No, it was a call center. Yeah.
Okay. So, but I mean, this is like a job. So
yes,
sometimes these treaties are, again, it has to be the whole point of it is to further your degree, your studies, your education. The CPT and OPT can usually bridge that gap. Look, I'm doing something that is 100% related to being a psychiatrist. Me taking tickets at the parking booth when people are trying to get out of the parking lot is not really furthering my education, right? So there's generally not going to be a treaty that you're going to claim for that. right?
Mhm.
So just, that's an interesting, I'm glad you reminded me of these, situations. A lot of these treaty things is in the guise of more geared towards, CPT, OPT, or just, part of my education. If I get a regular plain Jane job, like taking the parking tickets at the booth or working at the cafeteria or doing whatever it is I'm doing to scrounge enough money up so I don't have to beg my parents for it, there's usually no treaty there. But again, no Social Security in any of them. So that one's important too.
Okay.
Good question. Okay.
We have 4 minutes left.
Well, that went quick then.
Are
See,
we-
you're right, Josh. I start talking. Look what happened.
Yeah, it just keeps
Yeah.
going. Boom, half hour gone.
It's
There
gone.
goes Josh.
Wiped out.
Anyway, I think I don't see any more questions, so I think you guys have really, once again, done a great job helping everybody. I know it's always overwhelming when I listen to this thing, and I've heard it a few times, so I can only imagine what it's like as an international student. So we will try to make sure we get this recording out as soon as possible. And thank you all for coming, and happy tax time.
Yeah.
Thank you, Steve, and thank you, Josh.
Thank you.
Thanks
Kate.
for having us, Kate.
We're always happy to do
Thank
this.
you.
Thank you.
Have a
very
great
much.
weekend, everybody.
You too.
Thank you.
Bye now.
Thank you, everyone.
Bye.
Good luck.
Hi, Steve. Can I just quickly ask one last
Oh,
question?
sure. You caught me right before I did.
Sorry.
Sure.
Yeah.
Okay, I'm not ending. Hurry.
Okay. Yeah. So my question is, you did show forms like 1040 NR and then subsequent schedules with it, like different schedules attached to it. So if a student is filing for something and I am an F1 student from India, I have a treaty. So I need not just fill one form, right? Like 1040 NR. I have to attach the respective schedule with it, which has the treaty mentioned in it, or just one form will suffice.
What I didn't like that the IRS has done this year is, again, they changed the forms again. They've done it about 3 times in the last, they've done it 3 times in the last 4 years, is now they're breaking these things up into these different things where it used to all be in one form. So the instructions, I'm sure someplace will tell you, they'll give a table or something to say, if you have this, this, and this, then you should include Schedule 1. If you have this, this, and this, you should include Schedule 2. What, in their attempts to make the return simpler, I think they've actually made it more complicated because you don't know what the heck's going on, because now you got to look at it. So if it was simple and all I had was wages and probably the treaty claim, I would just need page 1 and 2 of the 1040 NR and then the schedule OI, because that's, in my mind, OI I think has to go with every 1040 NR. I don't know how it would, why they've separated it is beyond me. I don't understand it. But I'll be honest when I tell you, I haven't gone through this year's forms and instructions with a fine-tooth comb yet. It's new to me too. But okay, I'm looking at the instructions right now, and there is a table that says if you, excuse me, have this, this, and this, then use Schedule 1, Schedule 2, Schedule 3. But at a minimum, you should have the page 1 and 2 of the 1040 and then the Schedule OI, because OI is the one that asks you all the pertinent non-resident questions. I'm a citizen of X, I'm a resident of X, I've never applied for a green card, my current visa is this, here's my travels or not travels, and if I filed a tax return in the past, and oh, by the way, here's my treaty.
Okay, got it.
That I'm making.
We
The other
made-
things would be depending on, what you have going on in your situation.
Yeah, I understand.
Okay.
Okay, thank
Good
you
luck.
again.
Thank you very much. Yeah,
Everybody have a wonderful weekend, whoever's left.
All
Bye.
right.
bye-bye.
Yeah.